We're here at the Global Business Forum, Bloomberg's Global Business Forum, talking about some of those big economic challenges facing the world. So we wanted to focus on one particular region, in fact, and we've got Jordan Schwartz with us, Executive Vice President of the Inter-American Development Bank. You're based in Washington, D.C., an international development finance institution serving a whole range of countries across Latin America and the Caribbean. So we want to mine into your expertise. Thank you for being
It's great to be
with us.
Welcome.
Thank you, Carroll.
We're trying to paint a picture here of where different parts of the global economy are doing. We're very focused on central banks and the moves they've making. You know, the Fed affects everyone in the world, as we keep telling ourselves as well. Where are the economies that you're focused on now in terms of a post-COVID recovery? What's the outlook? What is 2024 looking like for them?
It's a great set of questions. The Latin American Caribbean region is very heterogeneous. Not surprising, right? We have the Caribbean islands, relatively small economies, generally single commodity dependent. In this case, the commodities often are tourism, if you will. Mm-hmm. And we have big complex economies like Mexico, Brazil, Colombia, Argentina. So it's a heterogeneous region, but it's a region that has been, I think, struggling to maintain and to increase its level of economic growth, of GDP growth over the years, to provide the kind of opportunities and services that the population has grown to expect. It's a middle-income region overall, but it still has vulnerability, important vulnerability. It has a few low-income countries, Haiti, for example, mm-hmm. Honduras, and others, but it's generally a middle-income country. And I would say a theme of the day for us, a theme of the multilaterals that work in the region, particularly the Inter-American Development Bank, intermediating on the capital markets, trying to bring long-term financing for development, both public and private, into the region, is how to help the region take advantage of its comparative advantages, to leverage its comparative advantages. Its food production, for example, the region already produces probably 3 times as much as the food that it consumes itself. It produces energy. It has a very green matrix. It has a large hydro base. It has geothermal. It has all kinds of renewable resources. It can be part of the solution to the global energy transition, part of the solution to global food security, and to be able to see investment into those areas and the growth of those areas, I think, will be part of helping the region return to a higher level of growth in the years ahead.
Jordan, what holds it back then? Is it the case that over the years, over the decades, because I feel like we've been talking about, let's take Latin America in particular, or even a nation like Haiti, gets caught in the policies of other countries. What is it that holds it back?
I would say...
and I hate to lump them all in one basket.
Yeah, that's a negative question. I have to find a way to make this positive.
No, I'm not trying to be negative. I'm trying to be smarter. How do we find a smarter way forward?
I think part of it is regional integration. So the economies of scale and scope that come with greater interregional trade, with the trade of energy, with the trade of goods, so that you can tease out the productivity, the competitive potential of the economies. It has overall been a region that has been somewhat atomized and hasn't brought together its own trading systems. That's probably part of it. I would say it's a vulnerable region. It's vulnerable to climate, to weather effects in general, particularly the Caribbean, Central America, but also increasingly, as we know, those commodity exporting countries that are suffering from drought, suffering from flooding, often suffering from flood and drought, increasingly at the same time in large weather events. So it's a vulnerable region. It has more to do in terms of bringing itself together. And I think probably there's a whole theme we could get into if we had another 6 minutes sometime to talk about competitiveness and the way in which the economies could encourage greater competitiveness and productivity.
We're very focused on climate here today. Obviously, right. We had the Earthshot Innovation Summit earlier on, the Global Business Forum happening as we speak. When you're looking at projects to support across the various countries that you work with, climate resilience, what are you looking at? What sort of projects are you involved in? Where are you seeing success?
It's a brilliant question. Listen, for us, we look sort of at 2 sets of challenges at the same time. One is the box, the asset, the investment. What can be done in order to better manage the risk associated with investment? What role can the financial intermediaries, the multilateral development banks, with long-term finance, with guarantees, with our own sort of toolbox for investment, what more can we do in that space? But then we also look at the systems and the utilities, the policies, the pricing, the quality of regulation, the ability of the utilities to offtake that investment, what needs to be done in order to make prices more self-sustaining, the financial sustainability of the utilities, the capacity of the transmission systems to offtake, to absorb all of this energy that's coming, and to deal with the intermittency of renewables. We are both a policy institution and an investment institution, and we're helping our client countries when we're dealing with both things at the same time, what goes into that investment and the environment in which the investment is being made.
Do you have all the financial instruments that you would like to be able to tackle some of the issues, especially when they're cross-border issues and you're dealing maybe with a couple different countries?
It's the cross-border issues oftentimes are not solely financial. It's about the integrity of contracts, about regulatory integrity, and the ability to trust and maintain the purchase back and forth or the trade back and forth of energy, as an example. The question about financial instruments is really interesting to me because we have been focused on financial innovation even as we are trying to assure the impact of the investments that we make, right? Because there's sort of two things. There's the instrumentalization. Mm-hmm. How do I spread out risk and manage risk better? What are the tools that I can use to do that? When do I deploy credit enhancements, guarantees, strengthening of offtake agreements, termination payments for power? But at the same time, what do I need to do to protect the consumer? What do I need to do to protect the natural capital of the in the environment of the investments? What role does multilateral have to make sure that whatever money we've mobilized can actually be paid back over time?
Right.
It's actually driving economic growth, the capacity of consumers and taxpayers to pay back all that finance.
And to encourage more future investment.
And to encourage more. I think that's an important point.
How much are you working with private investors to crowdfunding for projects as well? I'm wondering if we can gauge investor appetite in some of the projects that you've been supporting.
The IDB has a private sector wing called the IDB Invest, and it has an early equity and venture capital branch called IDB Lab. IDB Invest, which is we're the only multilateral with that kind of risk appetite, derived from an early investment wing. On the IDB Invest side, it is recently been recapitalized, which means that the governments that contribute to it from Latin America, the United States, Japan, Europe, have agreed to functionally double the size of the capital available in this world in which the whole concept of multilateralism is sort of being challenged.
Yeah.
We see a recognition that actually the private sector's got to be a major part of. So we have this vehicle, we have this institution, it's going to be doubling in size, and the balance of the IDB group is basically going to change so that it will be even slightly more than half private finance and the public sector side, the sovereign guaranteed side, growing as well.
I wonder as well in the MDB space, competition, right? You have the Asian Infrastructure and Investment Bank, among others, who are also looking to invest in the same region as you as well. Is it a competitive environment? Are you all competing to kind of fund the same sort of projects?
It's interesting. We've seen this year a concerted effort and a lot of pressure from our own shareholders to bring the multilateral development banks closer together, to function as more as a group, as a unit, come up with platforms for investment. We're not competitive the way commercial banks need to compete with each other.
But can you work together? Do you have shared goals?
A large part of our financing is co-finance, particularly with the World Bank, which is very active in Latin America and the Caribbean, has sort of a similar set of protocols around environmental and social safeguards, transparency, procurement, competition, and the focus on rule of law. It's a somewhat similar culture, though we are unique in that 50.01% are owned by the borrowing countries, Latin America and the Caribbean. The United States has 30% ownership. This is how, in the Eisenhower administration, this institution was designed with this unique balance. And so we bring that to the table when we bring in other multilateral development banks, and of course, presence in every country. We're very decentralized, very client-focused institution.
You talk about, certainly the global country involvement and the collaboration, if you will, geopolitics or upcoming elections we see them all around the world, but certainly here in the United States as well, with someone who's very involved. How does that complicate what you guys are doing?
It's really interesting. We see ourselves not as a government, but as a stabilizing force, right? So when we're engaged, we're talking about the energy sector, but the same is true for the social sectors, for health, education. We spend decades working with these countries to develop their social protection systems, right? Their health and education systems, their power systems, and we bridge governments. Even when there's dramatic change in policies, we tend to help smooth the volatility of policy over time.
Interesting.
That should be a function of a multilateral. We're there as partners for the growth. And even though the governments are our intermediaries, it's really the people of the country, it's the consumers and the taxpayers that we work for. And so I think we're used to seeing changes in political parties. We're meant to survive through those changes. And so hopefully we'll play that role going forward, Carroll.
Can I ask you briefly about the US election and what risk that could present, given that the US is such a big contributor to your funding?
And just have about 20 seconds.
No, it's a important question. I mean, we get on with our business, and we know and trust that consecutive administrations, as has happened in the past, support what we do and understand roughly what we do, and we hope to work with whoever comes in.
Jordan Schwartz, thank you so much. Executive VP, Inter-American Development Bank. Thank you so much for joining us
Carroll,
here.
a pleasure.